Well, thank you for inviting me. So pretty much I'm an independent agent. I own TWG, my branch is TWG Insurance Services, but I'm part of that conglomerate of like independent branches. And so my specialty is property and casualty insurance. So I insure homes, commercial, investments, and businesses. For this purposes, we're going to talk about residential. So I do both residential and commercial, residential, private residence, investment properties, multi-units, and all aspects of that. So for me, I've been licensed in 2009, so I've been in this industry just a little bit. And I opened my branch in 2012. My office is located right there in Westchester, just north of LAX. So my office has a lovely view of the airplane's landing. And so I'm licensed in California, Arizona, Colorado, Nevada, New York, and Texas. But right now, in the insurance climate on the personal lines, I'm not really working outside of California. I do those states for commercial because the residential market in other states are just as tough as it is in California. And so I'm pretty much concentrating. California is a whole new animal, so I'm just concentrating in California for residential. But once things open back up, I'll go back because in those other states, we're considered non-residents, and so the carriers are putting more emphasis on their resident licensed agents. We're pretty sure you may see the same thing similar in the, in the real estate market. They want you to work with a more regional agency. So when it comes to residential, we as as agents and insurance carriers, there's 4 different types of homeowners insurance policies. HO3s are owner occupied, HO5s owner occupied, but these are like more homes that are built in the last 15 years. And so they have the exact same coverages, there's no difference, it's just that you probably get a better rate on a newer built home. DP3s, these are pretty much all perils are covered, water, rain, hail, interior plumbing issues, anything like that is covered for that. Those are pretty much utilized for secondary residences, are considered seasonal, detached ADUs, and non-owner occupied or tenant occupied properties. And then HO6s are condos. Now, what's going on in the marketplace right now within these markets, within these types of policies, HO6s, condos, there's no carriers writing condos policies right now. No carriers writing condos. So everything's pretty much going towards surplus markets. Because of the fact when it comes to condos and HOAs, they need to have the condo be maintained. And so they want proof of those maintenance. I just recently had someone refer to me about the condo. They have to issue the condo's underinsured. HOA is underinsured. And so before she purchased, she wants to investigate the HOA and making sure that she's going to invest into this property, that they bring whatever levels of insurance up to their needs. So, but again, HOAs are, because of the fact that a lot of condos are older, and so they want verification of maintenance. So those are a lot of carriers pulling back, and most of the issues with condos are water losses because of maintenance issues. Any questions? Okay. Now, what really has tightened up in our market is underwriting requirements. So when you're going out there looking for a home that you're going to be selling or representing, or even someone purchasing, roof. And so roofs are tile, composition, flat, wood shape. If there's someone has a wood shaped roof, no one's going to accept it because wood shaped roofs are highly flammable. And so with our climate, that's not something that they want. The best roofs are, composition is fine. If it's considered in a high fire area, tile roofs are recommended. But as far as lifetime use of a roof, tile goes to 25 years or more. Most carriers with a composition is 20-year lifespan. They may go to 25. And if it's older than that, they'll do a roof exclusion. And what a roof exclusion is exactly what it is. Any damages from water, wind, any of those things will be excluded. So you'll have no coverage for that. The other is plumbing. No copper, PVC, no galvanized. Because any home that has a galvanized piping or plumbing system was built in the 50s, which means that the carriers say, guess what? Those properties have not been maintained. So at this point, that puts that over 70 years old in the 70s. And so they're like the carriers are looking for really maintained properties. And heating is 25 years, electrical 25 years. That can vary. If you have someone that did electrical systems in the 90s or late 80s, that should be fine as long as the electrical panel is good. But looking at 200 amps or more, circuit breakers, no fuses, which will be found in older homes like built in the 1920s. Again, these are homes that have not been maintained or updated over the years. Any questions regarding that?
So if the assumption, like for example, no galvanized line, they're assuming that since the plumbing has been updated, nothing's been maintained.
Right.
So one will cancel the whole.
Well, no, one won't cancel the other, but that would be one of the requirements to say you're not going to write it. It's just a hard stop.
Okay.
But there are carriers that will do galvanized piping. But again, you're looking at if there was a loss, they're going to look at it and say, or is more maintenance issue than necessarily because you didn't fix it or upgrade it. So you may not need to get the coverage that you want for the loss. They may say that, well, this is because of galvanized piping, this something happened, and so this may not be covered. So just to cover your bases, galvanized piping. And the galvanized piping, we're looking at more of the service lines, the entry points into your kitchen and your bathrooms, and all that. It's not to have the main lines going into the home itself. I know that sometimes the service lines can be galvanized, especially over homes.
So going back to the condo insurability, if an older condo does have an insurance policy in place now, would you recommend trying to avoid filing a claim on your policy so that you won't get kicked off?
Well, a carrier will not kick you off for one water loss, 2, 3. But one water loss, things happen, but as long as in the application process, we're saying that, because on the application, they ask, what was the year the roof was replaced? What year was the plumbing replaced? What year was the heating replaced? What year was electrical? So, and honestly, these inspection reports really did not give us that information. And so those are things that as a buyer, work with a general contractor, do a little bit more due diligence on that to make sure that it is up to code. Our lease has been updated. Say, hey, someone say, hey, this roof looks like, get it certified. Oh, this roof been done 10 years ago. So it has another 10-year lifespan. Or the electrical system, this panel was just done the last 10 years. Because sometimes the permits are not there. Excuse me. The other what's going on right now, even though we had all this lovely rain, we had this fire. A lot of carriers were only doing fire scores of 1. Now 2 is pretty much being excluded. Personally, these are the areas that I'm unable to get quotes for: Pasadena, Glendale, Palmdale, Lancaster, Palisades, Anaheim Hills. Any place that you're close to a hillside is pretty much a lot of carriers are pulled out.
It's a lot of it.
Huh?
It's a lot of it.
A lot of carriers is close to a hillside.
Okay.
A lot of the carriers are pulled out.
Pulled out.
Yeah, they're no longer writing business.
What's the difference? Score 1, 2, 3, what's the
I
difference?
mean, think of like Westchester Airport area. There's no hills.
Right.
That's a protection class 1.
That's score 1.
That's a score 1. A protection class 2 used to be like lower parts of Palisades. but now that's considered, that, which usually in the past was fine, but now they're saying no.
Now it's score two?
Now, it's considered, it was always score two, which score two was acceptable.
Oh, okay. But now it's not.
Now it's not. They went down to just one. They just want no brush exposure at all. And so, like I said, most of LA County,
First, section score two or more.
because it goes from up to 9 and 10.
Okay.
So for example, I have
Oh,
a
so high risk.
high risk, yeah. So I have a house up at the top of Topanga.
Got it. So it's hard to get.
Yeah, because they're looking at, besides protection, looking at entry points. What's the easy access if there was a fire? Is there more than one entry into the neighborhood or location of the home? And then, of course, high brush, hillside, was there a recent fire, and homeowners loss history. Having lots of losses is not good. I came across, I wrote a policy, but we have to go to underwriting for it. A homeowner that was selling the property didn't really disclose, they had a water loss. The claim was only for $1,000, which means they may have had a $2,500 deductible. And so the carrier paid out, $1,000. But that was on it. So I have to go back and present that, hey, that was prior. We had to present pictures that those things were fixed and we're able to put the insurance in place. But when it comes to claims, be very careful, if it's working well. If it costs quite a bit of money, if it's under $5,000, fix it yourself. Don't even worry about the claim. Even if you have a $2,500 deductible, if it's less than $5,000, fix it yourself. Or have your clients fix it themselves. And also, claims on homeowners insurance follows the person. It follows them. So if you have,
Follows the person versus the property.
the property, the claim itself stays on the property, but the claim itself follows the individual. So for example, a new buyer, if I pull up, I'm going to see a loss history, and it could possibly show that there was a claim, in which case it would not be associated to that person because they're the owner. But at the same time, that person who sold the property had a claim, they go and purchase another home, that claim is going to follow them to their new property for 5 years.
5 years.
5 years. The less you go, but it stays on the clue report, and the carriers themselves actually count it for 5 years. So when you're looking at homes, sellers and buyers, see the claim, see if there's any type of loss history. If it has any loss history, see if it's been repaired properly.
So when you're issuing a policy and there was a claim on a property, do you factor in if it was like human error or a system in the building? Like if it was a kitchen fire because someone, had.
Well, there's no distinction. It's just that it was a kitchen fire. And the fire happened in the kitchen. It wasn't, there's no distinction between human error or someone left the pot on or someone, stepped away or put oil in and it got into the flames and whatnot. It doesn't really matter. But what carriers really is more looking at water losses. I had a client who had $180,000 water loss. Reason being, new parent, flushable wipes. Didn't know that flushable wipes really don't mean flushable. And so it was considered dirty water because it was the upstairs bathroom, got into the pipes, went into the ceilings, dirty water. So he ended up having to be out of his house for 6 months. Out of his house for 6 months. Because he had high-end features in the home, the ceiling had to be pulled out, mold, and all that. So it ended up being like between the fact that he had to pay for living costs, two, he was out of his home for 6 months, and it was $180,000 claim. But mine was like, hey, it happened, so you had insurance, in place for it. But did they renew him? No. And it was a little technicality that I didn't get renewed because they sent him a letter. He was out of the country, and he didn't take care of it. And so they're like, he came back. And they're like, well, sorry.
So you didn't get insurance?
I did. I put something in place. No. I mean, there's always a carrier. The question's like, what are your clients gonna pay? There's always, we can always get it insurance. The question is how much. Okay, so when it comes to, most inspections on a home replacement cost, $700,000 or less, they just do exterior. So as long as the exterior looks well, rafters, painting, no chipping, sidewalks, driveways, no cracks, garage doors look great, roof is in good condition, trees not overhanging your roof are close to the property. They're pretty good. They'll just even if they come back, they'll come back and cut. 30 days to cut back the trees, or 30 days to fix this, or 45 days. So they give them notice. But as far as buying or selling, your buyer, make it more presentable so that the person doesn't have any issues with insurance, do those things.
So do you do an inspection in order to issue a policy?
No, a policy will be issued because we're doing an assumption of that the home is in good condition. And that those items, the roof, plumbing, heating, electrical systems have been updated. Square footage, they've been verified, and everything that's pretty much for Los Angeles County Assessor's Office, in LA County, is listed. So, but an inspection comes out, and they say, hey, there's cracks in the driveway. The trees are breaking. Those have to be fixed. If not fixed, then we're going to cancel your policy. I had one client, one of my producers, the inspection happened. Guess what? He had 3,000 square feet of basement. So his replacement costs went up. His premium pretty much doubled because he had more house. He had 3,000 above, 3,000 below.
What triggers the inspection?
The inspection's always done.
That's what I'm saying. Do you do an inspection in order to issue a policy?
No, what happens?
Issue it, but then you do it.
Yeah, so what happens, we issue the policy on the assumption that everything's fine with the property. The inspection comes out. If everything's fine, the policy stays in force. If there's some things that have to be addressed, those items can be addressed, and the policy will stay in force. If those items are not addressed, then the carrier will cancel the policy.
So is it within a certain time?
With 30 days.
So in the first 30 days of owning the property,
Yeah.
the insurance company will have an inspection.
Have an inspection.
Within the first 30 days of issuing the policy?
No, from 30 days from the effective date of the policy. So for example, you close your policy, don't move into the 21st, you may, put it in place on the 18th or the 20th, so it'll go from the effective date of the policy, 30 days.
And then anytime we change carriers, it would be another inspection.
Well, not right now. In the past, it was very random. Some got inspected, some don't. Nowadays, you're doing inspections on everything. Okay, and then when it comes to high value homes, $800,000 or more replacement, they're doing interior also. Just not just exterior. They're going to do interior. And so some of the things that they come through and look at, of course, that one's like a multi-unit, gas line? No, electrical. And like this was an internal, actually this was an actual shoe, electrical system. And so this is bad. And so, of course, that came back, and the owner had to go out and put a new panel in. So again, one of the major things that's going on with the carrier is proof of electrical panels. Oh, sorry. Okay, yeah, proof of electrical panels. Unacceptable are Zinsco, Federal Pacific, Challenger, and Pushmatic. Those are usually found in your homes built in between in the 50s. And in the 70s, Zinsco went all the way to the 80s. Federal Pacific was pretty much the 50s, 60s. And Challenger, not so much, and not so much Pushmatic, but pretty much Zinsco and Federal. And I've come across Zinsco and Federal. In which case, replace. And on average, I had one, and they replaced it like $5,000. But again, just $5,000 versus being on a health and fair plan, you're paying, you have to do dual coverages and all that other good stuff. So electrical panels And what I'm doing right now is I'm requesting pictures of, electrical panels. Maybe when you go out and do your pictures and whatnot, have on your file, take pictures of electrical panels.
Usually the inspectors flag them.
Yeah, yeah. But again, I've seen what the inspector, sometimes the pictures are not that great, because they're looking at different things. But I would say if you talk to an inspector, say, hey, make sure you get really good pictures of the electrical panel. Sending agents copies of the inspection report is great, because if there's any issues, we can just send that to the underwriter. And that's very helpful. Again, these are some panels that are unacceptable. They may look like they're fine, but they're not. And most of them will have, it's labeled as Ensco or GE or Federal Pacific. So, but these look like these are breakers, what they are, but the breakers themselves have had a history of fires, and so they become unacceptable. Okay, that's pretty much what what I'm going against as far as like writing business, as far as agents go, to make our lives and your lives a lot easier, is definitely going ahead and looking at those things, having your buyers or sellers, if they're interested in selling, gather that information, have it available. It just makes the process a lot easier. It's taking us as agents at least 2 to 3 weeks on average. You get a quote. So if someone's interested in buying, I would suggest at the start of escrow, first day of escrow, contact an agent and start working on getting insurance quotes. Because it's taking us a lot longer, because not only that, all of us, there's limited marketplaces, so all of us, everyone that's purchasing is going to the same markets. If something has to go to California Fair Plant, God forbid, they're getting 1,500 submissions a day.
So you need a plan in place to close escrow. We have a couple new agents.
Yeah.
We need a plan.
So it's like the close escrow. I just had, they closed it, but it was pretty tight because the owner had some questions, and we submitted off to the, here's a quote. You like it? Yes. Let me go get it approved. And so they waited a couple of days, and like now they were dealing with that whole escrow closing.
So it sounds like there's a risk, because you get the policy, you close escrow, within 30 days you're going to do a physical inspection, and then it could be withdrawn. Then you have a homeowner that doesn't have insurance.
It's very rare that it happens unless the home is not well maintained. You're not going to be selling homes that are not well maintained.
My policy was rejected after I bought my house.
Oh, shit.
And it was perfectly fine. I think the insurance carrier just wanted to not issue policy.
Who was it, my mask?
It was Safeco. I think it was Safeco. I had Safeco before too.
So you purchased, they gave you a 30 days, they canceled at renewal, or did they cancel?
Canceled the new policy. After I purchased, they said in 30 days it's going to be canceled because they sent an inspector out.
Okay, in which case they said the
They said the driveway was sinking, but the driveway goes up, so I'm not sure how it's sinking.
Well, that could have been, I've gone against underwriters with my clients. Sometimes it's just not worth it, but I've gone against, I'm like, no, this is how the property is, and like here's a fresh picture, you see this not sinking. But at the same time, some carriers are like, no.
Yeah. Mercury insurance.
Yeah.
I just took pictures.
Yeah, and all honestly, back in the 2022, not 2023. 2022, the difference in premiums between a Mercury policy, a Safeco policy, Travelers, wasn't all that much. And California is very highly regulated. They all offer the same. They have a little bit more, but they're pretty much all of the same because it's a regulated industry, your policy. But nowadays, it's like, fluctuate quite a bit. And they'll pretty much price it out. So they, hey, you know what? We don't want this property. You know, I mean, I had a realtor come to me. The insurance ended up being way more. It was like the house was selling for $600,000. It was an Atwell, beautiful house, up in the hills, one road up, had a beautiful view of the lake, but the insurance is going to be $12,000 a year.
So do you get refunded if you pay more?
Well, I think, I mean, it's like, we just had a meeting, like, I think some of the agents now are going to put contingencies regarding insurance. You know, can the property get insurance? Because a homeowner, oh, I got insurance. That may not be the case. You know, so you may want to look into how you want to handle the insurance aspect of it, because if that's going to be a factor. But I can tell you right now, on average, premiums are running $2,000 or more. If you're, you know, I mean, I did a home up in Lancaster with $6,000. You know, I did a home in Encino, high value home, that was $23,000. You know, I mean, I got a home up in Bel Air, his was $10,000. You know, so it's like it fluctuates all, you know, and which carrier can I place it with? You know, so those are the things. But on average, with people like, oh, my previous house when I paid $3,000, you know, no, you're looking at double.
So is California Fair Plan a thing where they'll accept anything?
They'll accept most, but they still want maintenance issues. You know, they'll come through and say, hey, you have to fix this. But even the California Fair Plan will deny a policy if it's not maintained to some degree. They don't care about the electrical system. You can have tube and wire, old fuses and stuff like that, but the homes still have to be maintained, at least visually.
I thought there's some kind of coverage that they don't have.
Yeah, I think it's just.
California Fair Plan is like expired, and the system is big. They can't handle the amount of exposures that's going on right now, because I ran across other agents who are writing California Fair Plans, and they're underinsuring. You know, but if the owner wants to self-insure, you know, but that's fine if you don't, because lenders don't care.
They just need fire.
They don't just want fire. You know, and with the California Fair Plan, the max of total insurable value, which means home, fencing, garages, pool houses, can only be a total amount, loss of use, can only be a total of $3 million, which can be eaten up pretty quickly. Because it includes your personal content and everything like that. So that's just really fire. That's the last resort. We as agents, when we go to California Fair Plan, there's a box that we check. Have you been declined in the surplus markets, in the excess markets? If you have not, technically speaking, we should not be writing this policy. You know, because you have to still get a second policy to give you your water, your wind, you know, your liability, in which case that can at times be this amount to the same price as having one policy. And also what's happening with rates, there was Prop 103 in 1988, California instituted this. It's pretty much protection that all the insurance carriers have to go to the Department of Insurance to request rate increases. During COVID, they didn't do any rate increases. Even though the carriers submitted rate increases, they did not approve any. Now they're in the process of proving it, but until the carriers get to what they consider probability, it's still going to be limited carrier. As far as us as agents, we don't see anything, maybe fourth quarter 2025. But it's going to. But at the same time, me, with my agency and my access points, I'm always getting new carriers, to fill in the gap, because one gets pulled up, I have something else to come in. They're all AM Best rated, so they're very much profitable companies. There's this new system come up called Dimtech, and they're a rater system. They just haven't been around as long as AM Best, but again, lenders, they say, I want to AM Best. I mean, I had a prospect come to me because one of his insurance for his home, the carrier got downgraded, and so it became unacceptable. But as far as your buyers or buyers goes, address insurance pretty quickly. So what areas are you pretty much selling? What are your areas?
Here, the west side, the valley, that's where we get into trouble with fires sometimes.
Yeah, I mean, even here, like Eagle Rock area, like again, anything on the hillside can run into issues, considered fire, even as urban. But I mean, Hollywood Hills, of course, limited access, the streets are narrow, some of those areas. But like the valley's got hit, even before Sherman Oaks was fine now. But again, like the flats of LA, just more running into the fact that carriers just say, you know what, I have too much exposure in that area, and so I'm just not going to write anymore. It's not like I put a zip code in, it's like, it's fine. The zip code next door to that is like, no. So they're just whatever they put in their systems is pretty much determine how we're going to quote.
So just to clarify, so you're an insurance broker, so you have access to different programs versus like ones?
Yeah. So I have access to, all the major ones, and regional, and carriers that are not normal to California, but they say, hey, we have a market here in California. They have an opening for California. So there's you have a verse, unlike State Farm and Allstate and stuff like that, they're just pretty much, what they want marketplace. But yeah, so I would suggest working with State Farm right now is still not writing any new business. I don't know what's going on with farmers. Farmers, some yes, some no, but farmers have because I come from farmers. Farmers have their little general agency that they work with, like an independent broker that they work with. They make, they will write through that. But all my big ones, Travelers, Safeco, Nationwide, Review Mutual, all of them.
So this may be a silly question, but so when we hear that they're not writing new policies, is that just for homeowners? Or are they not writing new auto policies?
No, auto too, they're like, for Travelers, if you have your home, they'll add your auto. If you have an auto, they'll add your home, but you have to have an existing policy with them.
So there's still other ones aren't writing for auto?
No. The only one that came back is Mercury's still writing for auto. Progressive is, but they're doing a 15-day wait. Business days, not just, it's 15 business days. So if anyone's purchasing a new car, but you never had any insurance on the car, that's going to be difficult. In which case most people are just using it on someone else's policy for 6 months and then transferring onto their own. But you still have this within the household, but people are working it. But yeah, I don't foresee, like, everything's, my progressive rep is like, oh, you're gonna start writing the business. I'm like, I told people I wasn't writing auto, so I'm not getting, those anymore, But I've always did hard to place homes. So that was kind of like my niche prior to everything went crazy. And so I already had those relationships and access points. Because a lot of agents are not familiar with quoting in the excess market. It's a totally different animal.
How do you feel about earthquake insurance?
If you can afford it, get it. It's a catastrophic policy. It's a catastrophic policy because you have a high deductible. Your deductible is 10% of your replacement cost. So if you have $800,000 replacement cost, that's $80,000 deductible. So usually, sometimes I heard that FEMA could help out. You can get a second loan, but I would, if you can afford it, get it within your budget. And so I would say less than 5% of my clients actually have earthquake. the ones who have earthquake usually have the umbrella. They have the earthquake, they have high limits on their autos. But it's not terrible. I mean, if you get a policy through the California Earthquake Authority, those are more like least expensive, but you can do standalones. Also, flood. No one thinks about flood insurance. As I say, if it comes down, it's fine, but it starts rising, it's not covered. And so if a project is located down a hill, there may be some water exposure. I have a client that did that. She had flooding in her backyard because of the way that her home was situated.
So if you're in the flood zone, then you
Well, I mean, most of LA is not considered flood zone.
yeah.
But if you're by a hillside, I would recommend it. But at the same time, there's flats of like Huntington Beach floods, parts of Long Beach floods.
I was gonna say, when you're near the water.
Well, I mean,
Those kind of things.
yeah, I mean, no, but there's certain parts of LA this way that the streets, it doesn't flow out, but if you're at the bottom, anyway where the waters can come down, I would recommend flood. And flood, you don't insure the whole home because odds are everything knocked off your foundation. Here in California, it's very rare. So you get like $250,000, $300,000, $400,000 pretty much to do the water remediation, mold, and any type of repairs. So you're never gonna like lose your home compared to, like Louisiana, Texas, and Oklahoma and stuff like that, where there's major flooding by rivers. But at the same time, it's like what happened up Kern River. When a Kern River overflowed, most of the people have flood insurance. But I would recommend, I have earthquake, my house built in the 70s. The other thing, when you do get a discount, if the property is considered earthquake retrofitted, which means that's braced to the foundation. And if you can provide proof of that, like they give you a discount on earthquake. Any other questions? Yeah, so that's my world. But again, I always stress my big fours: roof, electrical, plumbing, and heating. So if you can do those big fours, that makes us as agents a lot easier to quote and put a policy in place. Roof, plumbing, electrical, and heating. Yeah. Actually, one of my new carriers actually came back, was washer line. When was the washer last replaced? Because water hoses were washers. That's where some of the losses happen too. They get old and you have water loss. But that was a new carrier that I was kind of surprised with that one.
So all these things, roof, electrical, are all required to be up to standard in order to get a policy. That's the bottom line.
Yep.
Right?
Got to be updated, maintained. So, usually they want it within 30 years, but if you can show that it's been at least, repaired or looked at or inspected, you say, hey, I got this inspected in 2010 by a licensed contractor, you have proof in writing that everything's fine, up to code, nothing needs to be addressed, in which case you use that 2010 as a reference point if you have proof. Because everything else, when you're pulling electrical panels, the permits have to be pulled for those. So those are on record.
So with the 30-day inspection, so I'm closing escrow Monday.
Mhm.
A condo that we had a very difficult time getting an insurance policy because there had been a claim earlier this year and the building's over 50 years. So should I be telling my buyers they're gonna have an inspection?
They don't, condos don't really, they'll do an external inspection. They won't do an internal inspection.
Oh, okay, okay.
Yeah, condos, they'll just come through and do an external. They won't do an internal. But with condos, again, it's like, the older condos, it just takes a little bit longer. You know, so may I ask you who they end up going getting insurance with? Okay. And like actually with farmer, I came across farmers, they only do owner occupied. But the carrier that they, and the carrier, our carrier markets, and what these carriers are doing is kind of driving me crazy because it's like they'll give like Geico access to that product. And like, wait a minute, why don't I have access to it? Oh, we have a different contract. But then, but Geico's not right. Farmers are running across like Sutton National Insurance is actually bamboo, is the underwriting company, but they're doing condos. But they're working it so that people can write and not completely, you know, dead in the water.
So yeah, so we had done the contingency removal except insurability.
Yeah.
You have to leave that safety in place in case you.
Yeah, I mean, you know, and I ran into,
No, eventually we did.
Oh, okay.
yeah, I mean, I ran into, what, Long Beach, condos too close to the water. Santa Monica, too close. Now they're pretty obvious for restriction, right? So now it's like too close to the tideline.
Yeah, I had a condo listing on Naples Island off Long Beach and couldn't get a loan because there wasn't enough insurance on the building and the homeowners didn't want to come together and get building coverage, so each person had to get their own additional flood coverage, but you couldn't get a loan on the property. So it kept the values down. I'm like, why would you guys, you're all paying for your own side policy. If you come together and pay for a building policy, your values will go up tremendously because people can get loans.
But at the same time, what people know as condo owners is your interior walls. It's not the building itself. So the exterior of the building have any type of mold issue or some type of damage because of water. Guess what? It's not going to be covered. It's only your interior unit. So they may just like, you know, insure it, but it's on their interior walls. So condos are great. And then also the other type of homes that could be considered a condo is like in Redondo Beach. They'll have 3 homes on one lot. And so what we do is insure more of the property, the building, give it more, you know, the interior walls. We'll buff up the interior walls portion of it than we normally do like a, you know, 1,100 square foot condo. You know, we kind of like put more on there, but again, everything else is outside of that. But yeah, so I mean, I would recommend, you know, speaking to someone like myself, a broker. I mean, because you go with farmers, you know, but here's my other thing. If you get a quote, don't shop around, accept it. Okay, do not, because we're all going to go to the same market. But if you get a quote, accept it. Me as an agent, if someone comes to me and they have a farmer's quote, you have to stay with farmers because guess what? That's an admitted carrier. I can't go omitted to surplus. Even though the surplus may have been less expensive, I can't go surplus. But I'm telling people, get a quote, don't shop it around, just get a yes.
But then it still doesn't go to underwriting.
Well, yeah, but again, it's like it's a new purchase either, unless it's like a flip situation, you know, it's going to be acceptable. Condos are usually fine. If you go through if you get a bindable quote, it's an accepted policy, unless some reason exterior that the building is not maintained. Okay, but in most cases, you know, if you're selling hopefully the exterior of the building. But again, we're on the application process and what the client signs saying that this is when this was updated. This was when this updated. So talking to the HOAs and seeing what their maintenance, you know, have gone through. And it just helps the underwriting. The carriers just like it. I mean, you have one that they're replacing the roof. Great. The condo association, that's like 2024. Great, they did this, like, oh, they did the electrical, you know, in 2020, you know, so those things look good. At least the underwriter was saying, hey, the HOA is maintaining the property, you know. So, but yeah, brush clearance, 100 yards. I don't think you really have, you know, trees, distance between trees. If carriers start asking for quite a bit, then it's kind of like, I had one client that had to clear 10 trees out of his property. You know, and we got it insured. And the other things too is if they're considered in a fire area, is closed eaves versus open eaves. Are you familiar with open eaves and closed eaves? I wish I had a picture. Think of, this is your roof. This is your roof here, right? And you have, these are like the wood. If those are exposed, that's considered open eaves. If it's completely closed off, that's considered closed. Most new home purchases, building, everything like in this, I think they built in the 80s, are pretty much come with closed eaves now. But the older homes may be considered open eaves. And open eaves are not acceptable for brush areas.
For what?
Brush areas.
Russia.
And that, you know, again, that could be like Sherman Oaks, you know, certain parts of Pasadena, the flats of Pasadena, but it's called your eaves. And so that's the other thing. But again, but if it's in the like around here, then no problem. You're not in a fire score area. Any other questions?
No, that was great, thank you very much.
Yeah.
That's super
Yeah.
thorough.
I-
like that, it's a great quote, Jen, but.
Yeah.
Let's discount anything. Yeah, you're gonna save it the day one, but you're not gonna get what you want.
Yeah. Yeah, that's kind of like my little motto. It's like, you know, if you're looking for, I mean, what I do, I find the best price. I get you the best coverage for the best price. You know, that, you know, but again, we're regulated, you know, as far as what carriers offer. When I first got into insurance, I found agents writing incomplete policies. They're putting on an owner-occupied on a dwelling policy. A DP1 very limited. DP3 very limited. You know, HO3 is more extensive. And also HO3s, by the way, is 1 to 4 units. Those are considered homeowners. Homeowners policies are 1 to 4 units. Anything of five units are considered, you know, commercial. But at the same time, with State Farm, they consider 3 units as being, they only want duplexes. But for us, for all my carriers, 1 to 4 units, that can be written owner occupied or, you know, fully investment purposes only. And of course, policies written in LLCs, trusts can all be added. But sometimes, depending on the carrier, the individual will be on the policy, and the trust will be listed as additional interest because they want a person. Or sometimes you may do a purchase purchase a property into the LLC. If that's the case, there's different carriers that allow for that. But again, that's where we come as being experienced agents. You know, we take all that and present nice, slowly put for you to move forward on. And congratulations on your new purchase. So, are you mostly listing agents, or are you? What are your?
Yeah. Yeah.
Yeah. So but yeah, just look out for those, and like I said, give yourself plenty of time. Yeah, and like I said, 2025, I was foresee. First was second quarter 2025, and now it's looking more so like fourth quarter 2025.
Then they'll start listening.
Yeah, because what's happened is like a carrier stick their feet in, then another carrier stick their feet in,
They're all waiting for you.
and then it's like, then it's like, oh, okay, we'll go in. But don't expect prices ever be as low as they were. They're going to be on average $2,500. Well, I did one for $1,800. Before I did a condo. Condos are expensive. You know, I did a condo in Playa Vista, Playa del Rey. 1,800 square foot, $1,700. Well, that was actually because it's quiet, very low risk. A condo in another area. I did a condo up in Beverlywood, I think it's considered. That was $2,600. Different area. So, but yeah, we'll quote it and service, but I said, again, I iterate those 4 things and give yourself plenty of time. If your client interested in purchasing, get a quote. You can get a quote lasts for 30 days, by the way. So if you get a quote, they don't move forward, it's fine, keep us in mind for the next opportunity.
Cool. Thank you, Jen.
Great. Yeah, I thought I had cards in my card, but